Hey, it's Soleil, and this is episode 148 of the Orange Pill Investor. And today I want to talk about the unified string theory of everything finance. The one thing that I'm a little bit afraid of are black swans, and one of the common comments or questions that people have is like, okay, but what do I do in a bear market? Or how does this fare? I sell covered calls and puts against assets, and some people will say, okay, but what happens in this environment? What happens in this environment? And it's definitely something that I wrestle with. And I got put onto this guy named Chris Cole. Quant Bros shared it. I think maybe Ryan. But I think him and Jeff have probably both posted on it. I'm sure they're both familiar with him. And so this guy has some very interesting work, and he went back like 100 years, and he specifically called out the strategy that I'm using, which would also happen to the buy and hold crowd, is that he said that over 100 years, even though selling covered calls and puts and things like that have done well over the recent decades, over 100-year span, he said it completely annihilated wealth. And what he wanted to do was say, okay, if you were gifted an enormous sum of money and you wanted it to last generationally, what would be the balanced portfolio that you would create to make sure that it didn't get annihilated in any market conditions? So the bull markets, the bear markets, the black swans, the Great Depression and stock market crashes and all of that stuff. And so everything that he's talking about is completely intriguing, and I can't stop watching his videos. I took a look at a couple of his analysis. I guess I don't know if they're papers or whatever. I got to check and see if he has a whole ass book to read. But the TLDR version is that he put together a diversified portfolio of like 5 different sectors, and they probably have to be uncorrelated. And let me just switch over to that so we can get a look at it. I'll share a link to this video in the notes, which is the same exact video I believe that Quant Bros shared. 10%. And so he's got, it's almost like 20% all the way around. So equity linked, this is the one that made me laugh, gold. And so when I saw gold, I'm like, is this the dumbest motherfucker on the internet? Like, how can this be a recommendation? But then I had to look at the date. This is 2020. So, I mean, everybody isn't put onto Bitcoin right away, and only people with laser eyes could probably see where I was going with this. But not financial advice. I can't give financial advice. But if I was ordered to invest in one asset, it would be Bitcoin. So I would immediately just replace gold with Bitcoin here. But then there's some interesting things that he talks about later as well. I think it was in a different video, but he talks about in sports and in your portfolio, there's something called, well, in sports it was called wins over replacement player. And one of his favorite players was Dennis Rodman, even though Rodman's main thing was just rebounds and probably defense. But you put him on a team with Michael Jordan, and now the greatest scorer in the world gets second and third tries at scoring, and it's not even fair. So his point was that if you look at player for player, you only got 5 slots on a basketball team. You already got Jordan, and now you're going to put 4 other players in there. And if you replace almost anyone with Rodman, your wins go up. And if you replace Rodman with almost anyone else, your wins go down. And so I'm sure there's a few players that people can think of that are like, oh, these guys have amazing stats, but they go from team to team to team to team, and none of those teams ever win. And he actually came up with this metric. I gotta find his research on this one too. But his name's Cole, and so they came up with this metric called C-Warp. Cole wins over replacement portfolio. And I'm assuming that this set of sectors are the top 5 C-Warp values. And so if you replace any of these with something else, your wins goes down. Your overall portfolio over 100 years goes down. And the interesting part of this is I did find a video where he admitted to owning some Bitcoin a couple of years ago, but he still thought it was kind of speculative and wasn't sure that the U.S. and world governments wouldn't squash it. And I hope he's a rabid, psychopathic Bitcoiner at this point. I have no idea if Artemis Capital Management actually holds any Bitcoin itself. But 2 things about this. So there's no, we say in the Bitcoin space that there's no second best. And it made me laugh when I thought about this wins over replacement portfolio, because there's nothing you can replace that I would replace Bitcoin with to get more wins. Now, that's from an overarching point, because there's nothing else that you can invest in that you can self-custody. However, if we're just talking stock market, then I would be tempted to replace, at least during this bull cycle, I could be tempted to replace Bitcoin with MicroStrategy, since it's a leveraged Bitcoin play. And that's just, if the only wins we're going to count are just fiat dollars, which then you could use to buy more Bitcoin with. You got to buy Bitcoin with something. So it's just kind of interesting that when you say, what's the second best? I want to diversify, but if you've already picked the best asset, then there is nothing that you can replace it with and get more wins. So yeah, so if I had a gun held to my head and you're like, okay, one asset, okay, Bitcoin, but you can also apply the wins over replacement to strategies as well. Is it going to be buy and hold? Is it going to be something that provides dividends? Is it going to be the S&P 500 index fund? Is it going to be Amazon? Is it going to be, whatever? Or, a strategy like what I do, selling covered calls and puts to generate yield. And for Bitcoin, I would be tempted to just buy and hold, or Dot Kruger X account, I think it actually was a YouTube video. He had a video where he detailed the optimal allocation between Bitcoin and cash according to the Keller criterion, and it was around 52% Bitcoin if you followed that. And you'd balance every once in a while. So when Bitcoin pumped, you'd sell it for some cash, and then when Bitcoin got maybe into a bear market, you would use some of that cash to buy more Bitcoin. So I could be convinced to either buy and hold, or something like what Kruger was talking about would be the optimal strategy to go along with Bitcoin. As far as stock market assets, I think the benchmark has to be the SPY or the VOO. If any of these wealthy investors or companies are like, okay, we want to invest some money, can you beat the SPY? If you can't, then I'll just invest in the SPY. So for me, I'm looking at, does selling covered calls and cash secured puts beat the SPY? And in my experience, it does, which only kind of makes sense if you agree that labor has value at all, then it should generate some kind of return. And so I don't see that there's any reasonable expectation that passive index investors and dividend investors should receive the same returns, same potential returns as someone who is actively investing. Because if you're doing some work and that work has any value, you're making decent, good decisions, then those decisions should return some value. So someone who's just sitting on their hands and they're a plow horse, and the world needs plow horses, but if you're going to work your 9 to 5 or a couple of jobs, and you're just going to take all that money and stick it under the mattress and put it into S&P 500, and just to insulate yourself from inflation, you're not going to make any money doing that, but you can generate wealth out of your own blood, sweat, and tears. That's great. But for me, I want to generate wealth with the wealth. And so that's why I'm an active trader. But so I can't, let's just take a look at some assets. So I've already said that if I could only hold one, it's Bitcoin. But just from a pure dollar value, I can make an argument to hold MicroStrategy. And if I'm going to look and say, okay, well, how is this fared? Well, MicroStrategy was just ho-hum until they adopted the Bitcoin strategy. And then it's like, okay, immediately investors saw that there was value in that at 5x. Of course, it retraced. But now that Bitcoin is pumping again, it's going to the moon. So what would I replace if I'm doing Bitcoin or MicroStrategy? What am I going to replace that with? Tesla, okay, that's up like 13,000% all time. This is the only other asset that I hold besides Bitcoin and derivatives, and I think this is reasonable. You could argue that they're correlated with Bitcoin because it's kind of perceived as a tech play. Bitcoin and Tesla are both tech plays, and Tesla owns Bitcoin. But Tesla doesn't really, the chart doesn't really match Bitcoin's chart. So I don't think that Tesla and Bitcoin are necessarily correlated, even though they have Bitcoin on their balance sheet. I see Tesla basically disrupting vehicles, energy, labor, probably a couple other things, humanoid robots and full self-driving. It's funny, it's like Tesla is just a car company, like Amazon is just a bookseller. So let's look at Amazon next. This one up basically almost 6,000%. Okay. You could argue that most assets that you're investing in, this would have been a better, you'd get more wins with Amazon if you had gotten in wherever here. But of course, you had to wait from 2000 to 2015. You had to sit on this for 15 years to get, for Amazon to pump. And at this point, yeah, they got Amazon Web Services or whatever, but they've already pretty much dominated the world for online selling. they're not going to disrupt it again. What they've already disrupted. So I think Amazon is not. Amazon. I would rather invest in Amazon than the S&P 500. That's for damn sure. But it doesn't get my juices flowing. Like, am I going to replace Bitcoin allocation with Amazon? Am I going to replace MicroStrategy with Amazon? No. Am I going to replace Tesla with Amazon? No. So they're out. NVIDIA, this is insane. I had to look at this a couple of times. Up 154,337%. That's insane. So if you got NVIDIA down here to $1.70 back in 2020, again, you had to wait 20 years. And then you can get your 10,000x, or excuse me, 154,000x. Again, they're the clear winner, but they're not going to disrupt. They've got competition. Anybody else can come up with a better chip. Hell, during supply disruptions, Tesla started making their own damn chips. They're like, okay, if you can't make the chips for us, we'll make our own. I don't necessarily see Tesla disrupting NVIDIA, but anybody can do this. I also see some risks. Almost all of these chips are made in Taiwan, and if China just moves and starts to invade, what's NVIDIA doing today? Okay, a little bit. But NVIDIA will probably continue to do well and amazing, but there's nothing that I own. I wouldn't sell my Bitcoin, MicroStrategy, or Tesla to buy NVIDIA. So that's out. Apple just introduced a dividend, so I couldn't give a shit less about Apple at this point. To me, they're a zombie company. Until they adopt a Bitcoin strategy, anybody who offers a dividend is basically admitting defeat. Their tech department sucks ass, and they have no new ideas. So there will be rabid iPhone fans that continue to buy these phones for the next 10, 20 years. Apple, I would probably own Apple over the SPY. But this is a non-starter for me as well, even though you could have made 20,000%. So this would be a better, but you had to get in for a buck. Really, 42, yeah. So 5x from here, but you had to wait 20 years to get there. Yeah, so for me, wins over replacement. There's nothing, at least in the next 18 months, there's nothing I would replace MicroStrategy with. Absolutely nothing. Now, to get a little bit of diversification in my account to make the damn algorithm happy, I have had to stash some of these miners, but that's for two reasons. One, it's to satisfy the algorithm, so it's not giving me too high of a concentration risk. They were kind of pissed off when I had like 95% of my portfolio in MicroStrategy, and I wanted to buy more, and they're like, no, this exceeds your concentration risk. You can't buy any more of it. If this was a cash account, they probably wouldn't have cared, but this is on margin, so they're trying to hold my hand and protect me against myself. So I started, but the other purpose is, I'm doing these videos, so I wanted to demonstrate the wheel. So I sold 20 puts in Mara, and then I got assigned. So I sold 20 covered calls in Mara, and I will continue to do that. It's still profiting. It's probably not going to profit me as much as it would if I held just straight up MicroStrategy. But everyone can't put 100 shares of MicroStrategy in their account. So the strategy that I use can be done with any account size pretty much, and with technically any stock. But I've already said that I invest in just Bitcoin derivatives, and Tesla, and so I consider these miners a Bitcoin derivative, and so when Bitcoin pumps, these tend to benefit, and so that's why I use these as my my algorithm satisfying assets, and also basically for teaching tools, just to show how the strategy works and how you can generate yield and continue to just create wealth with wealth. Now, Cole's video did put the fear of God in me, because when he said that my strategy was annihilated during certain time periods, and the example that he gave was the stock market crash. So it lost like 75% of its value, and then I guess it would be like a V-shaped recovery, and within just a few months it had recovered, there were giant rallies. And if you're selling covered calls, you're going to limit that upside. And I have two reactions to that. One is, who gives a shit? Because my strategy works off of percentages. So it doesn't matter if you have a $100,000 account, or I created this $5,000 account in Robinhood just to see if I can do this strategy with, a starter account. And well, I bought the miners at an all-time high, and this dropped to like 3,000. This went from my goal is to turn this 5K account into a 25K account as fast as I can, but within about a week or two, Bitcoin crashed from 70 to 60, and all the miners crashed 20% as well. And so I turned this 5K account into 3K within a couple of weeks. Didn't take very long. However, I just kept at it, and I continued to sell covered calls, because when this account was worth 5,000, I'm earning 1% a week, so that's $57 a week. Well, when it's only worth 3,000, it kind of doesn't matter, because I'm still earning 1% a week. Now that 1% is only $30 a week, but if the price of Mara is 20 and I get 1%, I can buy one share. If the price of Mara drops to 10 and I get 1%, I can still buy one share. So these crashes don't stop me or stop anyone from continuing to implement the strategy and buy additional shares at whatever price, because 1% of the price is always going to be enough to give you one more share. So that's my first answer to, and I almost feel embarrassed for myself for kind of challenging his research, because the dude is, effing brilliant. And the gold bug stuff is a little old-fashioned, but like we say, everybody gets the price of Bitcoin they deserve. So as smart as the guy is, I'm sure, and he meditates and shit, so I'm sure he'll be a Bitcoiner at some point if he hasn't been completely won over. I can't find anything definitive, but I've only just recently started binging his videos, so I'm looking forward to that. But yeah, so if I missed out on some upside, that would kind of be fine, and I would still be just accumulating positions all the way down anyway. And when something does crash, you can get a little, I normally try to bake 10% call away value. So I don't know what his research was doing. I don't know if people were selling at the money calls and there's just no upside at all. But I bake 10, 20% call away value into my strikes. So if something rallies 50%, I'm going to still at least appreciate 10, 20% of that every time that happens. So I'm not terribly worried with that criticism. But the other thing is that with an allocation to Bitcoin, I think that's going to end up being a flight to safety. And his research goes back 100 years, but Bitcoin didn't exist over that 100-year period. So this is going to be some pie in the sky stuff, but unfortunately, I think all of the guy's research can just be replaced by Bitcoin. If I suspect, and you know, past performance is no guarantee of you know, the future performance or whatever, but I suspect that Bitcoin is going to solve this guy's problem of wanting to figure out what kind of portfolio allocation would preserve wealth over a 100-year period. And it's got a sting that decades of research boils down to just buy Bitcoin. But that's where my head's at this point. So yeah, I kind of just don't care, because I'm getting 52% returns a year. Now, whether my account is a 10K account and I'm getting 52% returns on a small account, or whether my account's 100,000 and I'm getting 52% returns on that, great. But if my big account, because the stock market crashes, gets reduced to a small account, my returns are going to be the same. The overall portfolio size is going to be down, if you want to look at it that way. But that doesn't mean that I just stop trading and I stop, you know, generating profits from the money. So I'm still going to keep binging this stuff. My kind of goal is actually identically to his. I want to know what strategy I can use that will you know, basically succeed over a 100-year period under any conditions. And unfortunately, stocks, you know, individual stock companies will not do that. Everybody invested in AT&T and was it Bell before that, and IBM, and none of those things are generational wealth transfers now. So as much as I'm irresponsibly long MicroStrategy, I wouldn't even say that that's a generational play, because companies can do whatever the hell companies want. But Bitcoin is a protocol, and there is a chance that some of the devs could screw it up somehow. But I like to think that if they try, most of the folks running the nodes would just run the correct fork, and you know, like they did with Bcash and a couple other forks. All of the shitty forks just died, and the strongest fork won. So I see Bitcoin replacing gold for the next 500,000 years, or until Tesla humanoid robots makes money irrelevant. If we've got 10 billion humanoid robots picking all the crops and feeding the cows and doing the laundry and the dishes and mowing the lawn, all of that crap, then who knows what the world is going to look like, and maybe money won't even matter. But until that day happens, I will be investing in Bitcoin and MicroStrategy. And apologies to people who just tune in to see the trading, but today I wanted to get a little bit philosophical. this guy Chris Cole's been living in my head rent free for at least a couple of months, and he's definitely one to listen to if you're into listening to podcasts and interviews and whatnot. And I will spill the beans on one thing that he said that I haven't heard anyone else say, is that he did admit to owning some Bitcoin himself, but it was kind of just, he was having fun with it. And his idea at the time, and this was at least 2 years ago, was that he was kind of confused about why the government would allow Bitcoin to flourish if it was challenging the dollar. And if you listen to any number of Sailor videos, Bitcoin doesn't actually compete with the dollar. You got to use dollars to buy Bitcoin anyway. So Bitcoin isn't as much of a threat to the dollar as some people may think, at least right now. But his theory was that because their monetary policies were so inflationary, they were kind of like, oh, okay, well, all of these people who would be speculating in real estate and driving up home prices and the stock market prices, they'll just take all of this extra money and buy Bitcoin with it. And it's kind of like helping their CPI numbers, because instead of inflation driving up the price of real estate, there's billions of dollars flowing into this asset called Bitcoin that 99% of the people on the planet really don't give a shit about. So if the price, if the price of homes get too much that people can't buy them, that causes voters to get pissed off. But if the cost of some digital commodity is inflated to bejesus, most of the voters don't even notice. They don't care. They just accept it as someone else's problem. And so in that sense, his theory was that maybe the governments were allowing Bitcoin to flourish or even encouraging it because it was kind of like a releasing the steam valve and the pressure off of inflation, and letting all of this money that would normally drive up inflation just vent off into a speculative asset. And I thought that was friggin' genius. So I went from wondering if this guy was a fucking idiot because he's investing in gold 1 minute to he's probably the smartest person on the planet the next. But that was the other thing. And so if this guy, as much as 4 years ago, was the dumbest investor on the planet because he's still pitching gold like he's Peter Schiff, then we're still early. And I talked to a lot of investors, and they're like, oh, I wish I could have gotten in Bitcoin when it was 500 or 1,000 or 10,000 or 20,000 or 50,000. All of these numbers, we're still early. If the smartest people on the planet just 4 years ago didn't grok Bitcoin, if you grok Bitcoin, that just automatically makes you in the top 1% smartest people. So someone can be smarter than you, like this guy's smarter than me. He's probably smarter than you. But in 2020, if you were buying Bitcoin, you were smarter than this guy. He was still putting huge allocations towards shiny yellow rocks. Now, he had good reasons for doing it because history showed that it was a good thing to do. But this is the digital age, and as far as I'm concerned, Bitcoin as digital gold is even kind of like a bad comparison because gold is so useless. I don't want Bitcoin to even be compared to something that is now been made useless. Other than its actual uses, it should be worth probably like 10% of its value because it's decent in electronics and making jewelry or whatever. But most of gold's value is speculative. And can be debased by mining it faster. So at any moment, if you can get on the Bitcoin train and you can get off zero and just start buying it, you're automatically just rocketed into the top 1% of the planet. I feel the same way about MicroStrategy. It's months and months ahead of it getting admitted into the S&P 500, and so I'm front running it now. And when everybody else figures it out, it won't be too late necessarily, but I'm just glad. I'm glad it's still early. I'm glad it's still early for Bitcoin, and I'm glad it's still early for MicroStrategy. So that was way longer than I intended to talk this morning, and I'm sure there was a couple of things that I meant to say that I left out, and start writing myself a couple of notes. But I think I said most everything that I wanted to say. I'm buying Bitcoin, I'm buying MicroStrategy, I'm buying Tesla. I can't really justify replacing any of those assets with any other assets that exist. There may be better assets, I'm just not aware of them. And I stole that line from Stephen Mark Ryan's channel. If there's any Tesla fanboys that follow him, he likes to say that Tesla is the best risk-adjusted opportunity in the stock market that he's aware of. And I feel the same way about Bitcoin and MicroStrategy. So that's what I'm doing, and I'm combining those assets with the yield-generating strategy of selling covered calls and puts, and then I take that money and I buy more Bitcoin with it, or I buy more shares of MicroStrategy with it, or I buy more shares of the miners with it, and then I sell more covered calls, or more puts, or more leaps, or whatever it is. Now, I do need to try to figure out if I need to start adding some kind of hedge in here, some kind of like buying some puts or something for Black Swan events. But I'm not convinced that that's any better than just owning Bitcoin. Eventually, I don't think Bitcoin is going to follow the overall market as much as it does now. Once it's what, $500,000 a coin or something, I don't know that it'll be as susceptible to market influences. No guarantees, but I am kind of toying with the idea of what assets are best to accumulate for giant Black Swan events. So still learning, but for now, my strategy is working well for me, and I hope these videos are helpful for others as well. All right, be good, y'all.